Hello there. In this video, I am going to teach you how to deal with depreciation. According to the International Accounting Standards, depreciation is defined as a systematic allocation of the depreciable amount of an asset over its useful life. When dealing with the depreciation, consider the three basic things. We do have depreciable amount, and simply means how much you are going to depreciate, and we do have the depreciation period. Is means how long you are going to depreciate your assets. And lastly, we do have the useful life. In this sheet, I am going to apply the straight line method. So the policy says any item over $300 is going to be considered as fixed asset and should be depreciated over its useful life. Because of the huge items, IAS 16 allows companies to categorize the items based off the groups such as office equipment and vehicles and building and lands and so on. So as example, I have created two categories. The first category is office equipment, the second category is vehicles. So in the first category, I have around 5 items: computers, which is office equipment, computers and laptops, printers and tables. And then we do have the date of acquisition. The date of acquisition, the date that we bought or acquired the asset. Here we are considering 2018. The cost of acquisition, these are the cost of acquisition. And we do have the useful life, which are the 4 years for the office equipment. Let's go down, and we do have addition. Addition means after we bought the assets, and then there should be additions. That's it, same computers and chairs and others. Another category, we have the vehicles. We do have cars, minibus and lorry. We need to calculate the depreciation charge in 2018, 2019 and 2020. Here we do have the useful life, and we do have the depreciation or depreciation charge, how much you are going to depreciate in 2018. Also, we do have the accumulated depreciation. So in the accumulated depreciation 2018, and then we do have the one column for days in 2019. In the next next year 2019, we need to charge the depreciation in 2019 as 31st of December 2019, and we need to calculate the accumulated depreciation as on 31st of December 2019. And lastly, we need to calculate the net book value. We need to see in the last year or the reporting period of 31st of December 2020, we need to know the accumulated depreciation, and we need to know the net book value of our assets. So let's get it started. First things, we need to calculate the days in 2018. We need to apply this formula: equal $sign J $sign again, this in the row 2 minus the acquisition date gives us 263 days, and we need to drag down to apply the formula for all. Then we need to calculate the depreciation. The depreciation for the 2000 at the 1st of December 2018 is calculated as equal the open the bracket the cost of acquisition divided by useful life, close the bracket, this times to the days in 2018, and this divided by 365 will give us 36, and we should drag down the formula to apply for all. So in the first year, the accumulated depreciation is equal to depreciation amount or depreciation charge, because we do not have accumulated depreciation as 31st of December. It means equal to this amount. Let's drag down the formula. And then we need to calculate the days. In the next year, 2019, we need to calculate how much we are going to show in profit or loss as depreciation charge. So as we are in the second year, we need to apply the full year. It means 365. Drag down the formula. So the depreciation charge on 31st of December 2019 would be as equal, open the bracket, cost of acquisition divided by useful life, close the bracket and hit enter. Gives us $500. Let's apply the formula. So accumulated depreciation in the next year, on the second year, would be equal to the accumulated depreciation from the previous year plus the depreciation charge for the current year, gives us this amount. And let's drag down the formula to apply for all. In 2020, which is the third year, we gonna apply the same category or same formula, 365 days, because we still in the third year. So the depreciation would be the same amount, equal the cost of acquisition divided by 4, gives us this amount. So we need to chart the accumulated depreciation, or we need to show the accumulated depreciation would be equal to the accumulated depreciation from the third year 2019, which is the last year, plus the current depreciation amounts will give this amount. So you need to drag down the formula. On the 31st of December 2020, we should show the net book value in financial statements as it is, as this equal to the cost of the acquisition minus the accumulated depreciation as in the last year, would give out this amount. So let's drag down the formula to apply for all again. These are the, let's total this out, equal to depreciation sum of this amount. We need to show the depreciation as well, accumulated depreciation as well, equal to sum this amount applied to the accumulated depreciation equal to sum applied to the we have additional in 2019 and 2020. So let's calculate the additional two. This here we have additional in 2019. It means we need to calculate days equal to this date, equal to $sign. This is J, $sign again, 2 minus this date gives us 81 days for the first year, and drag down the formula. So we need to chart the depreciation for this amount also, for this cost equal to this amount, or bracket this amount, the cost of the asset divided by the 4 year, close the bracket, times 2 the days divided by 365 gives us this amount, and apply the formula to the next. So you need to calculate the accumulated depreciation as well. Accumulated depreciation would be equal to the depreciation at the first year, and here too. So in the next year 2020 we do have 30 full depreciation, full year, 365, track it down. The depreciation would be equal to this divided by 4, give us $1,000. So the accumulated depreciation would be equal to the accumulated depreciation from the previous year plus the current depreciation would give us 1,222, and we need to calculate the net book value. Let's apply for this to all. The net book value would be equal to the cost minus accumulated depreciation for the current year, and I'll drag down the formula. So here we have an addition on 7th of May 2020. So we need to calculate the days in 2020 by applying the same formula as we did before. Equal $sign, it is M, $sign again, 2 minus this date gives us 338 days. We need to calculate the depreciation would be equal, open the bracket, the cost of the acquisition divided by 3 years. This is categorized as 3 years, close the bracket, times 2 these days divided by 365 days, hit enter. So the depreciation in 2020 is $435. So let's calculate the accumulated depreciation. Should be in the first year should be the equal to the depreciation. The net book value would be cost minus accumulated depreciation. So let's total the additions would be equal to sum of this will give us this amount. On the vehicles, we have in 2018 the company bought the vehicles. We need to calculate the days in 2018 equal $, G $, again, to minus this date, accusation date. The depreciation in the 2018 calculated as equal, open the bracket, at same, the accusation date divided by the useful life, close the bracket, this times to the days in 2018 divided by 365 will give us the depreciation charge for 2018, and the accumulated depreciation again equal to the, in the first year, equal to the depreciation charge. So in 2019 the days would be 365 are full days of the year, 365. So we're gonna calculate the depreciation or account the depreciation for depreciation chart in 2019 by this formula equal to this amount divided by 5 years will give us this amount. So the accumulated depreciation the second year would be the accumulated depreciation from the last year plus the depreciation chart in the current year would give us accumulated depreciation. Again, in the third year the days would be the full days of the year, 365. So we're gonna charge the depreciation for this year as well, this amount, accusation cost divided by the useful life, give out this amount, and the accumulated would be equal to the last year accumulated depreciation plus the depreciation charge for the current year gives us this amount. So the net book value for this asset, which is car, would be equal to the cost of acquisition minus the depreciation for the last year or for the current year gives us this amount. $, M again, $, $2 minus this date, 1st of January, gives us 365 days. We will drag down the formula to apply the another one, equal to sum of this amount put sum of this amount. Depreciation impact on profit or loss for each year. In 2018, the impact of depreciation would be equal to the total of depreciation on office equipment plus the total of depreciation on vehicles would give out this amount. And again, we need to calculate this also. The 2019 equals to the total of office equipment plus the addition plus the total of vehicles would give us this amount. And last year we're gonna calculate, or we're gonna count the total of the equal office equipment plus the additions on 2020 plus the vehicles. So addition gives us this amount. These are the impact, or these are the depreciation charge which should be expensed out in profit or loss. So that's all. I would like to thank you for watching this video. So if you like the video, please support by share and like the video. Thank you.